investors, welcome to Proceemo, the value stock analyzer. Today is December 12th, 2022. Today we have a shiny analysis that Yukon Cornelius would find particularly interesting. On a long enough timeline, the value of any stock or currency drops to zero. Most companies don't last a real long time. They go out of business, they get acquired, merge with another, etc. A currency only lasts as long as the issuing body, usually a government, and governments don't last forever either. There is something, however, that has proved to hold value despite the turbulent nature of human history, and that thing is precious metals. Don't forget to like and subscribe. Your support will help us continue making content for you, and please check out Proceemo.com to see the following analysis for yourself. Silver and gold. Who wouldn't want some? Precious metals have managed to hold value longer than just about anything else on Earth. They are part commodity, part currency, and a consistent store of value. It's not always the best investment, but if you had to bet on something holding or maintaining value over a long period of time, like a really long period of time, precious metals are a good bet. And sometimes just maintaining value is good enough depending on your other options. Today's stock is likely a company you never heard of. Wheaton Precious Metals. Wheaton Precious Metals was founded in 2004 out of Vancouver, British Columbia. Wheaton was actually founded under a different name, Silver Wheaton, and its ownership and management has shifted a bit in its 18-year history. It's not all that interesting or worth getting into, to be honest. What is interesting is the business itself. Wheaton is a precious metals streaming company. What is a precious metals streaming company, you say? I'm so glad you asked. Precious metal streaming is when a company like Wheaton establishes contracts with precious metal mines to buy all or a percentage of the metals the mine produces for a fixed price during the length of the contract. In exchange, the streaming company will finance some of the mining operations. Wheaton then takes the output and sells the precious metals on the open market for market rates, which would theoretically be higher than the contracted price with the mines. Seems great, right? Risks for precious metal streaming companies like Wheaton are the mines themselves. There is no guarantee how much output a particular mine will have, and if it underproduces against its forecast, the streaming company assumes the bulk of the loss. Bummer. This is why it's important for Wheaton to diversify its portfolio by financing multiple mines, and they do. Wheaton, at least according to its website, has contracts currently with more than 15 mines distributed between North and South America, from Canada to Brazil, and one contract in Portugal. And these are long contracts from 20 years to 50 years, and in some cases the life of the mine. And the metals are diverse too. Silver, gold, copper, zinc, cobalt, nickel. They have it all covered. Sounds really cool, eh? Time to see if we can find some value in their numbers. Wheaton Precious Metals is trading at $38.99 as of this morning. Compared to 12 months ago, they're down less than 1%. They reached a high of $57.71 on April 20th, 2022 over the last year, and a low of $29.08 on September 26th. Price to earnings is 22.15 with an earnings per share of $1.76. And we have a dividend yield, which we will cover soon. Implied growth is 7.07%. Implied growth is a calculation that tells us how much growth is estimated for the future based on past earnings. However, as we like to say, past earnings do not predict future results. When we look at actual earnings, it's a roller coaster. In the last 5 years, we have a mix of increasing and decreasing earnings growth by a large margin. Wheaton is writing new contracts every year, and each contract has a cost of capital. They are paying for mining operations. This impacts their earnings. If we try and look through the roller coaster, there is a nice increase in earnings in there, I think. The latest yearly earnings was $754 million reported in December 2021. If we add the 3 quarters of earnings this year, we are already at $644 million, on pace to at least match, if not exceed, the previous year. So that's a good sign. Previous years are interesting: $507 million in 2020, then $86 million, $427 million, $57, and $195 million. Like I said, it's a roller coaster. When we look at our cash flow, we see similar spiky reporting. Free cash flow is the amount of cash left over from operations on a per share basis. We'd like to see this be positive and growing, and it mostly is, with the exception of 2018 where they were down $1.46, and free cash flow has dropped this year as well. Enterprise value mostly goes up every year. We dropped a little between 2016 and 2017, and then again in 2020 to 2021. Overall though, it does look solid. If we take a quick look at institutional ownership, we are at 56% right now, and that's exactly where we were a year ago. Neat. On to the scorecard. Implied growth over actual 5-year growth is 0.03. A value of 1 would be a perfectly valued stock, over 1 would mean overvalued, and under 1 would mean undervalued. We're at a crazy low value here with 0.03. But those earnings were spiky, so we're pretty much going to ignore this. Liabilities over assets is a 0.01. That is interesting. This would essentially indicate that Wheaton has no debt. And if we take a quick look at the charts, we do indeed see no liabilities reported last year. That's pretty cool. Steady dividend is true. Let's take a look. Over the last 10 quarters, the distribution has increased from 12 cents to 15 cents. That is a great increase. It is kind of a small distribution by percentage though. 60 cents a year on $38 a share is not super exciting. That's a yield of about 1.6%. Other interesting stats here are 3-year average revenue growth being greater than 10-year average revenue growth. That tells us they are doing well on the revenue front. Looking at the income statement, yeah, revenue looks good. Market cap over enterprise value is nearly 1, which means the stock is priced fairly. The market cap is $17.62 billion. The latest enterprise value is $17.43 billion. We know they don't have any debt. This also tells us they don't keep too much cash and cash equivalents on hand also. I don't want to spend too much time on the numbers. This is a really unique company. There is a lot of value here, but not in the way of, is this going to be a 10-bagger kind of way. Wheaton's value is mostly tied to the output of the mines it's contracted and the price of the precious metals. If we assume the outputs of the mines are consistent, then we're really speculating on the value of precious metals. Gold, silver, nickel. The price of those metals will be reflected in their revenue, which will be reflected in their earnings, enterprise value, dividends, and the stock price. Wheaton got its start in silver, and a large part of their mining contracts are still in silver. The price of silver has done well over the last 5 years, going from $16.98 an ounce in January 2018 to $23.47 today. That's a 38% increase. Gold has done similarly well, from $13.27 an ounce to $17.97 an ounce in 5 years. That's 35%, and that is great too. Precious metals are great for all-weather portfolios. If you are unfamiliar with all-weather, you need to Google Ray Dalio and Bridgewater Associates. All-weather portfolios are essentially a portfolio that is a mix of different asset classes in the attempt to balance out all different economic environments. They're great for consistency in all markets, and precious metals are a piece of the all-weather pie. If all-weather is your thing, then you should consider Wheaton as a proxy to holding precious metals. They have good contracts in place with a diverse set of mining operations. They have a history of positive results, though a relatively short history. They even pay a small dividend, which is pretty cool. I don't personally expect the stock to grow very fast, but I imagine it will continue to grow over time. Precious metals have outlasted pretty much everything, and it's really hard to bet against that. That's it for today. Please like and subscribe if you found this helpful. And if you really want to support the channel, please go to Proceemo.com and subscribe to our monthly service to see analysis like this for yourself for only $5 a month. And if you have a stock you'd like to see featured, please comment below. Thank you. Happy investing. Go find some value.